day and you pour it on the food. This will around this energy shift. It would be important. You can say in this respect, the momentum that markets had going into the war was this broadening trend. You were seeing things that hadn't performed well. It was actually going back to around Halloween last year. You were seeing value stocks perform better. You were seeing international stocks really well. That's even through February. You think things may have shifted. So the time price, I think they have shifted. We may be back in this lower growth, narrower set of years in time.
So this is not just a tactical trade, this leadership that we're seeing at the moment. You think it's more than that?
Yeah, well, so it's a tactical trade. It's typically when you do small cap and value points. That's where I probably think about like say we're here for a good time, not for a long time. Yeah. That's what we saw in the fourth quarter of last year and the beginning of this year. We're not sure that's the enduring story here, and it may have been the Iran war that caused people to kind of take that story off its axis. It looks like now where the earnings making up more narrow, where the market leadership is, it's gotten narrower, and the hopes that we're going to get above trend GDP with softening inflation and low interest rates and stronger cyclical force in the U.S. economy, that may be wrong.
So we've set the stage for a return of, let's call it U.S. exceptionalism with tech leadership.
That's how we're positioning. And I know the markets have already kind of run a little bit in that direction, but they haven't completely made up. You look at equal weight S&P versus market weight, equal weight is still up over the last 5 or 6 months. We'd be betting more on the kind of this narrowness continuing.
Brian, appreciate your time.
Of course.
Well articulated. Thank you. Brian Nick there of New Edge from the leadership from team right now. My script, I was thinking second months, got out a new session. Let's get an update on stories I'll share this morning with your Bloomberg brief. Yohara has been. Hey, Yohara.
Hi, John. Iran seizing 2 ships in the Persian Gulf for what they're calling violations, Tasneem. The country's semi-official news agency saying the IRGC transferred the ships to Iran's coast for inspection. Comes after rain. Then boats fired on a cargo and container ship in the Strait of Hormuz earlier today. United Airlines slashing its full-year profit forecast due to higher fuel prices caused by the war in the Middle East. The guidance coming as the airline reported better than expected first quarter results. Lisa will be sitting down with United CEO Scott Kirby at 9:15 a.m. Eastern. And Adobe announcing a $25 billion share buyback over the next 4 years. The company's CFO saying it's a direct expression of confidence in cash flows and long-term value for investors. The stock is up today, but it is down nearly 30% this year as investors worry about AI's potential to disrupt software. That's Bloomberg Brief. John?
Yohara, thank you. More from Yohara later this hour. Up next on the program, the Morning Calls Plus, we'll catch up with James Picariello of BNP Paribas, looking ahead to earnings from Tesla, and we'll touch base with Bloomberg's Edward Lowe in just a moment. From New York City this morning, good morning.
Top executives, global innovators, joining me for in-depth conversations with the biggest newsmakers on the day's top stories. Insights with Haslinda Ahmed on Bloomberg.
Agents at the forefront of some of the world's biggest stories. Jeremy Young in Tokyo, and I'm Heidi Stradwell here in Sydney with the trading begins. We're here in the center of all the action to get you set up with the numbers, news, knowledge you need for the day ahead.
The demand is indeed huge. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg VHF Trade Weekdays only on Bloomberg TV. Context is everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
The physical has just done its own thing, and the futures have not followed. And so the differential between them was never contemplated to be this wide. So in some sense, it's broken, right? And it may need to be reconfigured after this next Brent expiration. If we don't start seeing that convergence, then we may be in a position where no matter what type of news flow happens, futures may not respond.
That was Vikas Trivedi of Macquarie weighing in on the commodity market. The scores look like this morning. The futures on the S&P up by 0.8, up by close to 1% on the Nasdaq. A tech story in the mix that we'll get to at Ludlow in just a moment. In the commodity market, Brent and WTI still elevated, the tension still simmering. Brent crude at 99, WTI just breaking through 90, just briefly, back to 89.97.
So we have a ceasefire. We don't have a deadline. We don't have really a time frame when the president is going to be willing to accept this Iranian proposal. He is waiting for it. At the moment, nothing has really changed on the ground, as we continuously have been saying for days, except actually it's gotten a little worse in terms of the IRGC taking hostage two vessels.
That's the price action. Let's do some morning calls. First up from JP Morgan, raising its price target on Halliburton, highlighting demand growth. That stock up in the pre-market by 1.1%. The second call from Stifel, lowering its target on Birkenstock, reflecting a difficult consumer backdrop due to the war with Iran. That stock just about unchanged. And the third and final call from Barclays, raising its target on TSMC, expecting AI demand momentum to continue. Let's stick with tech. Sources telling us here at Bloomberg, a small group of unauthorized users have gained access to Anthropic's new Mythos AI model, which the company wants could enable dangerous cyber attacks. Ed Ludlow has the latest. Ed, that one's a shocker, or at least could be. What are the details?
Yeah, it's a shocker in part because of how this group or community got access to the preview. In the first instance, this was a contractor with a relationship with Anthropic, right? And they used those official contractor credentials to gain that access. And Anthropic has confirmed that and said that the scope of the access was contained within that. They also basically scrubbed various code bases like GitHub, where you basically sleuthing, find out where you think the code base might be for Mythos and access it. What's confusing for the Bloomberg audience is that this is being billed by the company, John, as being highly capable in cybersecurity, being able to go through very large code bases, find vulnerabilities, and then potentially act on them. But it is a general purpose model. You cannot isolate a capability. And in the reporting from Bloomberg's Rachel Metz, there's no evidence that they did anything wrong with the model. They experimented with it, but they didn't use it for some kind of cyber security attack. It's just that it dates back to April 7th, when Anthropic started the exercise of making it a very, very limited release to big technology companies and banks, and trying to keep a very closed circuit on who could experiment with what is a highly capable model.
So, Ed, let's talk about something I've struggled with personally for the last several months.
Sure.
What is real? What is hype? What is just marketing for the IPO? Now, let's take Mythos as an example. So Mythos, I'm told, I have to be really concerned about because it's potentially quite dangerous and could expose vulnerabilities. I'm taking that very seriously. And they're saying that we can only let certain people use it with authorization to work out what those vulnerabilities might be ahead of time. Got that. At the same time, I should be totally okay with the idea that unauthorized users have got hold of this. I'm struggling to square the two. It's either one or the other. Which is it?
Anthropic and its leadership have come in for criticism over a longer period of time relating to several releases of the models and how they communicate about the risks of it. You know, they warn often about the capabilities of various models. When I was on stage a week ago with Mike Krieger, who co-leads Anthropic's lab, basically the product cycle team, the way that he built this was that this is not some sort of great revenue exercise. They're leaving a lot of money on the table because they are closing limited release. There's lots of evidence that all kinds of industries want access to this. So we know what its risks are. Basically, potentially a bad actor, a malicious actor, if they got access, which is hypothetical, could do something bad with it. But on the other side of the coin, and this is why the Treasury and the Fed's involved, they want them to have access, those key financial institutions, core parts of the financial system, so that they can use its benefits, its proactive side. to answer your question succinctly, is it a marketing exercise? The pushback the company would say is that they're not economically gaining from this right now, at the same time as they are trying to negotiate their future with this government in the White House.
Ed, I'll leave it there because I think they are gaining. Because they're gaining because their valuation in private markets is exploding ahead of the IPO. But we can talk about this another time. The thing that's boosting equity markets right now, Ed, is NVIDIA and Google. Can I get your thoughts on this tie-up, this agreement? What kind of deal is this? Because as soon as that broke, I saw equity markets gap out to new session highs.
Yeah, so this is really interesting because to all intents and purposes, the other piece of news that came out is Google has 2 new TPUs, a training-specific one and an inference-specific one. That puts NVIDIA and Google in competition on the hardware side, on the silicon side. On the software side, it is highly normal for Alphabet or Google, through its various AI labs, and there are several, to cooperate with other technology companies. NVIDIA has its own library of open source models, specifically focused on physical AI, but increasingly Jensen has tried to talk up NVIDIA's software competence in agentic AI and its partnership with OpenClaw as an example. So this isn't a surprise if you accept that they are frenemies, right? They are both in competition with each other on the silicon side and on the software side. I would say if you're looking at the move in Alphabet, there has been a huge dump of news, which includes a number of cloud contracts, these 2 new chips, and the NVIDIA relationship. It's not exactly clear to me at this moment, John, which of those is driving the market in the pre-market.
And the pre-market. Yes, it's great to have you in New York, and I'm looking forward to the program in a few hours' time. Bloomberg Technology with Ed Ludlow. To Ed's point, it's not just the NVIDIA tie-up, that combination, that deal, whatever you want to call it. It's also Salesforce and Google Cloud expanding a partnership on AI agents. Just a bunch of news dropping in the last 10, 15 minutes or so, driving their stock out to new session highs.
Exactly. This is underpinning basically the US financial market. Everyone is back to the AI trade, the AI themes, because that is going to be something that is long-term and pretty much ignoring what is going on in terms of the conflict in Iran.
Later on today, we'll get some numbers from Tesla. Let's talk about that. James Picariello of BNP Paribas staying bearish on the EV maker with an underperform rating, noting a, quote, challenging setup for Tesla. James, good morning. What's challenging for this name this morning?
Yeah, I mean, as I think about the first quarter, we're about 10% below consensus on gross profit and adjusted EBITDA. We know first quarter deliveries and energy deployments. I think Tesla already provided that. And as we think about the auto business, the growth volumes were up 6%. The growth was entirely driven by rest of the world. So the core markets for Tesla, North America, Europe, China, that was essentially flat. There was some mid-single digit growth in North America, offset by declines in China, and Europe trended overall flat. So no major surprise there, positive or negative. And there's a heavy lift for the remainder of the year as we think about auto volumes relative to consensus, and even my own forecast. I'm quite constructive the rest of the year on autos getting the volumes getting better. On the energy storage side, the deployments were down quite significantly. Down 15% year-over-year, 40% quarter-over-quarter. I think that's going to be a focal point of one of the many focal points of tonight's conference call, just what drove that.
The pushback that I'd get from the bulls right now, I imagine would sound something like this. Talking about Tesla and cars is the same as talking about Amazon and books back in the 90s. That it's not about where we are now, it's about where we'll be and what this company will be in the future. Does that not resonate with you?
Oh, it certainly does. I mean, when I think about my price target, $280, 70% of that valuation is attributed to robotaxis and Optimus. Right? Optimus hasn't started commercialized production, right, of the humanoid bots. That happens. The promise is that it happens by the end of this year. And for robotaxis, the active fleet for Tesla hasn't really expanded. It's not accelerating from the end of from fourth quarter to now. So there's a high bar set for the progress rate, and we haven't yet to see it.
In the short term, though, do you think Tesla's going to have to cut prices if deliveries are low, at least in North America?
Yeah, I think so. Right. The $7,500 tax credit went away September 30th. Demand is not necessarily rich for EVs in North America.
Could this be a good moment for them, though, with gasoline prices inching higher?
Yeah, but when we think about the profitability, right? Tesla is guiding this year's CapEx at $20 billion. Right? Last year they did $8 or $9 billion. right? So the full expectation is for cash burn.
What car should I be excited about? Rivian mid-size SUV.
I knew
I
you
was
were
speaking.
gonna say that.
I like the Scout as well. Isn't that a VW partnership?
Yeah, that's
the
coming. That's
Well,
coming
18
late. The Scout's not coming until 2028, 2020.
Oh, really? That far out?
But I mean, we have an outperform rating on Rivian. I am quite bullish on the R2, which starts to really shift in the second half.
What kind of numbers are you thinking about with regards to Rivian and the R2?
So for the R2 specifically for next year, I'm thinking about 85,000.
Okay. And where are we now at Rivian?
For the total volumes around 40,000 with no R2 as of last year.
So introducing the mid-size SUV, we could see a doubling in sales basically for that company.
Yes.
Wow. Okay. James, appreciate your time. Thank you, sir. James Picariello there of BNP Paribas. You seen that? The mid-size SUV?
I'm looking at it now. It does look quite cool.
It's pretty cool.
We have to wait till 2028.
Sure. Is it 2028?
No, it's
No, Rivian.
actually it starts now. The Scout.
The Scout.
Oh, the Scout.
Scout's a different
Oh
car.
no, sorry, I'm looking at Scout. That's what you're asking about because I've never seen these before.
The Scout is very cool. Back in sort of leaning into Americana heritage.
This is very cool. But 2028, I mean, you can't wait around to buy a car for that long, can you?
No, I'm just saying there are some things coming on the horizon.
Yeah.
Anyway, let's talk about what's happening on the screen right now. A headline crossing just moments ago on Germany and the outlook for GDP. German GDP and the outlook from Germany, they've cut their 26th growth forecast to 0.5% from 1%. So they've cut their forecast in half on the war with Iran. This is the difference between the US and Europe right now, far more exposed for Europe at the moment, which is contributing to a much lower forecast for economic growth for the year ahead. If you're just checking it, that forecast is now 0.5%. It was 1%. It was already low, and now it's lower.
This is what the economy minister had to say according to an email statement ahead of the press conference they're going to be giving, going through some of these numbers and what they're seeing. Economic recovery expected this year is once again being held back by external geopolitical shocks. The war in Iran is driving up energy and commodity prices, it's putting a strain on households and increasing costs. We're seeing what Europe dealt with when it came to Russia, Ukraine. They're dealing with once again when it comes to Iran because they import so much of their energy. We saw also today Rachel Reeves in the United Kingdom after the inflation data came out and that popped. She said it is because of external factors like what's going on in the war in Iran.
Every time I hear from officials in Europe, it sounds so bleak. The ECB President Christine Lagarde with similar words as well. Stateside equity futures on the S&P high by 0.75%. Coming up next, we'll catch up with Stephanie Roth of Wolf Research on the path ahead for interest rates following Kevin Walsh's Senate hearing. Plus, Shihara is back with us. She's got your morning movers. Boeing shares rising after aircraft deliveries surged in the first quarter. That stock is up in the pre-market by 4%.